Strategic management students, thank you for joining in here for about 15 more minutes on Chapter 4. Dr. Fred David here. We did the first half of Chapter 4 a while back, and now we're talking about the second half. Actually, we're on page 113 in the 17th edition. We're in Chapter 4 on the internal assessment. Our last segment here in this chapter, we talked about financial statements and financial ratios. I was encouraging to use the template, the Excel strategic planning template at strategyclub.com. Download that and enter in your financial statements for your company into their income statement balance sheet. And then the template will generate the financial ratios you need, some of which you'll include in your project. You know, everybody's developing a comprehensive strategic plan for some company of their choice. And the internal assessment, the topic of Chapter 4, is going to be an important part of that project. So here on page 113, I see it reminding everybody that the factors we ultimately include in our IFEM need to be AQCD. I see AQCD again defined for you on page 113. It's such an important concept. You see there, A is actionable. I see it says that means that word actionable means meaningful and helpful in ultimately deciding what actions or strategies a firm should consider pursuing. That's what the word actionable means. And quantitative, obviously, is talking about dollars, numbers, ratios, percentages. So what we're saying here is, as you enter in your top 20 factors, internal factors, in your IFEM matrix in a moment, you're going to want to be on the lookout for stating these in AQCD terms. So when you do your research using IBIS World, S&P Net Advantage, and the Form 10Ks, FinanceYahoo.com, other sources that you see listed in both Chapter 3 and Chapter 4, be mindful that you need to garner from those research reports and all AQCD information or statements. That's what will be needed to provide a great foundation for formulating and ultimately deciding on a set of recommendations to go forward with for the company should use over the next 3 years. So AQ comparative, C comparative, obviously that means comparing 1 year to the next. Just a simple number of 13.2%. It's difficult to put that in perspective. I mean, is that down from 20 or up from 6? So comparative is essential. Be on the lookout for comparative information. And finally, there, the D for divisional. As you know now, I'm sure D stands for by segment. We're talking profit centers, the different segments of a company. We used the last time Walmart, that would have Walmart, the super centers, the online, and so forth. But even domestic versus global. A company like Hershey Foods, they get roughly 11% of their revenue from outside the U.S. Only 11%, 89% is from domestic. So that's considered a segment. It could be global by state, by region, by product. By segment, it's going to be critical. And that's what the D stands for, by segment. In fact, at the bottom of page 113, notice there's an example there of what a high quality factor would look like and what a low quality factor would look like in terms of AQCD. So I see on the bottom of page 113, if you had a factor, if you included a factor among your top 20 that said Exxon's natural gas segment sales grew 14% in 2018. Notice I indicated there that yes, it's actionable. Yes, that's quantitative. Yes, that's comparative. And yes, that's divisional, because Exxon makes money on their natural gas segment like they do their gasoline and various other segments that are considered profit centers. So that would be an excellent factor to include in your IFEM. A low quality factor would be something like Exxon's price earnings ratio in 2018 was 14.4. I mean, that's obviously quantitative, but it's not really actionable or comparative or divisional. So it's not that helpful in deciding among alternative strategies in the next chapter or two that could be beneficial to the firm. So this factor on the far bottom of page 113 is not that good. It could have been made better had we talked about 14.4 up or down from what number, and perhaps even give some data by segment. So that's one of the drawbacks of financial ratios in particular. They tend not to be that actionable. I mean, we want to include them, but we sort of don't want a half or 3/4 of our internal factor evaluation matrix to be financial ratios. So let's look on page 114 a minute. Give you there the steps in developing an IFE matrix, as we call it. We're going to use this matrix, the template. We're going to use the template to do this, to assimilate all the internal information we have into 2 categories, as you know now, strengths and weaknesses. And the template will help you assimilate this. It's not going to go out, the template is not going to go out there and collect this data information and all from those sources. I'll need you to do that. That's what companies do to use these. But in terms of the steps, first step there, develop a full and narrow list of key internal factors. We have that step 1 there just so folks won't think that the first 10 strengths they come upon, that's what you include, and the first 10 weaknesses. When we do this, actually helping companies do strategic planning, when we start talking about strengths and weaknesses, we generally will have maybe 80 strengths and 75 weaknesses, something like that. And then we get the group participating group to narrow that list down into a manageable list of 20. And normally we do include 10 strengths and 10 weaknesses. What are the most important factors? So that's why we have that step 1 on page 114. I didn't want you to stop at the first 10 you find, because usually that's not the best 10 or the most important, most effective items or factors to include in your IFEM matrix. Step 2 there says assign the weights to the key internal factors. Please know that the weight column, just as in chapter 3, the weight column applies to the industry. It means how important is that factor in our best judgment to being successful in the industry, as opposed to the rating. The rating column applies to the company. Recall that. That's the situation again here in chapter 4. Weight column applies to the industry. And be mindful, if you have 20 factors, the average weight would be a 0.05. So you can give some factors a weight of 0.10, 0.17, whatever you think in your best judgment. And remember, the small differences there mathematically on a percentage basis are really revealing that you consider a particular factor far more important than another based on that weight. And recall from chapter 3, as we're going to do here in chapter 4, we're going to array factors from high weight to low weight in our IFEM. Okay, we're not just going to randomly put these things in there and make our audience try to decipher what's most important or not important as much in the industry. So we use the weight column to do that. And in fact, step 3, I see at the bottom of page 114 on into page 115, the rating column, I'm going to use the 1 to 4 scale again. 1 being terrible, the firm's not doing well at all on handling that issue, and 4 being the firm is doing great in handling that issue. And please, you're going to make some judgments here, whether to award the company a 1, 2, 3, or 4 on there. Please don't make it a wild guess. It's going to be based on your understanding of the industry, the company, and its rival firms. Be mindful that a 4 is 33% more important than a 3. So even though a 4 versus a 3 doesn't sound like much, you're really telling your audience, if you assign a rating of 4, you're saying the company is doing really 33% more effective job on that particular issue than the factor that you gave a 3 to. So I wanted to make sure you understand that. I think on page 115, this table 410 is just letting you know that the reference, you want to use a narrow, not a broad industry. For example, McDonald's doesn't really compete so much with Carrabba's and Bonefish. With regard to McDonald's, your comparative statements and all, try to focus more on their fast food industry. Maybe Chick-fil-A, you understand, Burger King, Wendy's, that's the market industry McDonald's is in, rather than Red Lobster or Bonefish or Carrabba's or Texas Roadhouse. You understand? So that's important. So obviously we're going to multiply across rows and sum the rows. I see that on page 115 on into page 116. Now, folks, on page 116, this IFEM matrix at the bottom there, everything is perfect on that in terms of the format, the weight column. In fact, there's a raid from high weight to low weight ratings. You could have a 1, 2, 3, 4, anywhere up and down that column. Notice that on the rating column, I mean, something could be a major weakness and the firm not be performing excellent or not so great on that factor. Let's look at this matrix a little bit more detail on page 116. That's strength number 1, revenues from repair service in the store up 16%. This is for a small retail computer store that filled this out, that did this. I would say that strength number 1 is AQCD, sufficiently AQCD. It's actionable in that it probably means the business needs to focus more on repair service going forward, maybe even hire a couple of more repair service technicians. It is obviously quantitative, the Q. It is comparative. It says it's up 16%. I would love for them to have said up 16% from previous 2% or 14%. So whatever you can do to strengthen the factor, do so. And obviously it is D in the AQCD, because this business makes money off repair service. That's one profit center, you understand, just like retail sales off the shelves. So in that sense, I like strength number 1 because it's AQCD. However, strength number 2 is not that great. Notice, employee morale is excellent. Well, that's a nice fact, but we have to ask ourselves for every factor, is it A, is it Q, is it C, is it D? Now look, these factors don't have to be all 4 A, Q, C, D, but two is normally necessary, folks. A 3 is excellent, 4 is wonderful. But 1 is just unacceptable. So that factor there, employee morale is excellent. I would much rather have seen a comparison to the prior year, for example, or across perhaps segments there. Are we talking repair service profit center, or just the prices of the retail products being sold off the shelves? So, for example, number 5, in-store technical support personnel have MIS college degrees. That, again, that's a nice fact on that factor number 5 there, but I don't really like it that much. It doesn't really do the AQCD justice for me on that. So like I say, a retail computer store, small business did this, but there was room for improvement. I like the fact they do have a financial ratio in number 7. It says the debt to total assets ratio declines to 34%. Well, that could be improved as well to 34% from what? 94% or 36%. So I'd like some comparative information right there. But this is an example of how financial ratios in general apply to the overall company. So they tend not to be divisional and they tend not to be actionable. So I like to include them. They do reveal the overall performance of the overall company, but you certainly don't want to have 3/4 of all of your factors being financial ratios in IFEM. I guess that's the major point here on page 116. So anyway, I see you have the weight column, the rating column, 1, 2, 3, 4, up and down the rating column in your best judgment, how the company is doing on the factor. Multiply across and end up with a 2.73. And you realize the range on that 2.73, the dead lowest would be a 1.0, highest possible 4.0. I'm sure you realize that now. That means the average is a 2.5. So in general, this firm is doing above average on capitalizing on their strengths and improving on their weaknesses. That's what the 2.73 means. So going forward, if you included something like this, of course, I want it to be better in terms of AQCD, but with regard to the final number there, 2.73, you could say something like to your audience, the firm is doing some things outstanding, and you'll see a continuation of that in terms of what my partner and I, or what you individually are going to be recommending going forward. So the implication of matrices you're going to see is going to be really important in the strategic planning project you're developing. In fact, I'd like to see a 2-sentence implications note below every analysis and every matrix you have in your Word document. That's going to be what you're developing for your strategic plan for your company. Even below your ratio analysis, I would have a 2-sentence implications note there to say what? Going forward, based on that debt to equity ratio or that return on investment ratio, this company should do such and such going forward. So we're going to be futuristic, please, in terms of our implications note in our project files. So I'm hoping you listen up on that and are able to do that. And I'll give you feedback asking you to do that, because that's important to include in a comprehensive strategic planning project as you're working on. And I don't know what the one right answer is in terms of the strategy and strategic plan for these various companies that you're working on. I do know the right process and all. So I'm looking for you to be persuasive, convincing, have conducted substantial research and are self-confident in your strategic plan. But this chapter 4, the internal assessment, that'll provide an excellent foundation for moving on into objectives and strategies, which we're going to move into in chapter 5 and 6 respectively coming up. I hope you enjoyed reading the book. My co-authors and I wrote this book to be easy to read, conversational, exceptionally up to date, very practical, very skills oriented. This is how companies are actually doing strategic planning or need to be doing strategic planning. So I'm hopeful at the end of this semester, or maybe even before then, you're comfortable putting on your resume, perhaps, that you gained efficiency in utilizing strategic planning software or in performing SWOT analysis. In other words, you could include some skills on your resume from this course, given that this textbook that we're looking at here, I'm on page 118, 119 right now, given that its focus is on practical way firms or in companies, organizations are actually doing strategic planning. Thank you for joining in here. I hope you're having a good day today. I'm going to take a little bit of break here. We're going to look next time at chapter 5. It's one of the shorter chapters in the book. And then we're going to move on into what I think is probably the most important chapter in the book. That'll be chapter 6. So feel free to move on, read on ahead, try to stay ahead of the class. Remind you to please stay up on the discussion board, the announcements and the assignments on the blackboard. That's going to be critical to doing well in this course. Thank you for being here. It's good to see you. Talk soon. Take care.